Back with India Market Open, and let's get in Radhika Gupta, MD and CEO at Edelweiss Mutual Fund, to talk about the latest proposal to have a new class of a product available for investors. Radhika, good morning. Thanks for joining in. And at the outset, just set this up for us. I mean, is there, it's a great proposal. Do you reckon, is there a need that you sense amongst investors who might not have the wherewithal or the capital to put in money into a PMS or an AIF, but were wanting a product like this, which is not a low ticket size product? What does this do? How does this change the landscape?
So, at start, I think it is a natural evolution of the Indian asset management landscape, which started with mutual fund, which is a very constrained offering, and rightly so, because it is meant for retail investors. And in the last few years, you've seen the popularity of PMS and AIF products. So, as you said, what is proposed in some sense is a middle ground, although I do believe that much of what you can do on a PMS platform can now be delivered perhaps slightly more efficiently on this platform. So I think the appetite for new investing styles, new products, new asset classes is evolving. We are seeing that even within the mutual fund business, whether it's factor-based investing, whether it's smart beta, some of these strategies are getting interest on the mutual fund platform. So the Indian consumer, in terms of maturity and in terms of desire for new offerings, has certainly evolved. And so I think this comes at an opportune time, actually. And finally, in terms of convenience, the mutual fund platform is a very convenient operating platform. As the consultation paper mentions, it's an efficient platform. You can do your SIPs. There's a certain set of regulatory comfort and reporting. So it actually all comes together quite well. I mean, I'm genuinely very excited about the proposal.
All right. Hi, Radhika. Very good morning. Now, I'm just trying to understand in this sort of in between, and it seemed like it made sense, right? You have enough and more products for the retail investor. You can start from 150, 200 rupees a day. And then you have products for those who have a 50 lakh rupees and further threshold. Now, something in the middle for 10 lakh rupees threshold. What is the kind of appetite you see for this? And do you see this adding on to flows, domestic flows, in any significant fashion? Or is it more of a reallocation which will take place of the same pie?
I think it's somewhere in between. I mean, I think there is some money that, so let's just break it down. I think conventional mutual fund strategies, I mean, of our 60 lakh crores of AUM, 35 lakh crores is in equity or hybrid equivalents. And I think that remains the core of most consumers' portfolio. Let me be very clear and say that anything that is proposed on this platform is more satellite allocation. So I doubt it's going to challenge the existing mutual fund landscape. What I do think it may challenge is the current set of, as I said, PMS providers, category 3 AIF, simply because of mutual fund structure, the ticket size becomes more accessible, the taxation becomes far more favorable, and the operating conditions become a lot better. So I think it is some taking away from the existing asset management pie, and it is some expansion of the market. And the constraints, as I said, are mutual fund plus. So if I give you an idea, for instance, in mutual funds, you can only use derivatives for hedging. On this platform, you can use derivatives to take short positions. In mutual fund portfolios, you can't run concentrated equity funds, very concentrated ones. Here, concentration limits are more open. Here, credit limits are more open. So it's plus, rightly so. And I think there is an appetite. I think the Indian consumer has gotten more risk taking. If sold right, this could be a very good step.
Right. Radhika, let's just break this down, right? The reason PMS had a threshold set by the regulator was because these are concentrated portfolios. Yeah. It's not as diversified as a mutual fund is. Now, what you've done is you've created a hybrid model. Sure, the guys with the smaller ticket were doing this in the unregulated market, nevertheless. What I want to understand from you in terms of product launches, is it going to be largely skewed towards long-short strategies, which have become very popular in the recent past, and inverse ETFs, because those are the two that were very specifically mentioned in terms of building out this hybrid PMS mutual fund asset class?
So I think SEBI will eventually, and perhaps not all of this is clear in the paper, but my guess is that SEBI will eventually give categories in which you can launch products. Unlike AIF and to a certain extent PMS, they are open field. So, there is, it is up to the manufacturer to ideate on product category really. For instance, category AIFs have 3 very, very broad categories and a few subcategories. I think here the categories will be a lot more defined, like the current mutual fund universe where you have a large cap and mid cap and it's very clear what you do in each. I suspect it will be much more than the 2 categories proposed. So if in my reading of the document, for instance, there will be some flexibility around fixed income solutions that combine credit, because they also propose things like redemption restrictions, which you can't do on a mutual fund platform. Now, that will be very useful if you were to run a credit kind of product. Long short funds is one example. 130-30 funds are very, very popular globally. Inverse ETS, these are a few. There's more exemption in terms of holding REITs and InvITs. So perhaps something in the REIT and InvIT space, concentrated equity portfolio could be another option. So I'm hoping to see 8 to 10 options come out of this.
Just one more quick question. PMSs usually have a lock-in and okay, I think Taman and Neeraj want to come in. You have a question now? Okay. They usually come in with a lock-in and a high cost for a 10 lakh, and that for good enough reason, right? Because you're building concentrated portfolios on a client's demat, and you've got to be far more active in that sense. Keeping that in mind, how will the cost-benefit analysis work out for an investor and also for a producer like yourself? Because this will eat into the pie of mutual fund business and the PMS business that you're already running.
Yeah. So I think from a consumer point of view, this is likely to be more efficient. Now, I don't know the cost structure that SEBI is envisioning, but I assume it is going to be similar to your regular equity mutual fund. So say I was running a long short equity fund on this platform or a concentrated fund, I suspect the cost, rules will be very similar. On a PMS platform, a consumer is paying demat charges. They are sometimes paying performance fees, which are of course not applicable on a mutual fund platform. Most importantly, when the PMS does the churn, they're paying short-term capital gains tax or long-term capital gains tax on each trade. That doesn't happen in a mutual fund platform because there is pass-through taxation. So I think consumers are likely to be meaningfully better off pari passu on product. From a manufacturer's point of view, I think it really depends on the business that you have. For instance, for us, the core of the business is the mutual fund business. Can we, of course, within regulatory guidelines, leverage our existing team, our existing capability to also build products in this new asset class? Yes, we can. So I think for us, it is more operating leverage. If you had a large PMS business, perhaps it could take away. So I think for a manufacturer, it depends on what you have and the setup that you have. But for the consumer, I think this is better off.
Okay, so better for the consumer, more products on the anvil that we will be seeing. Will it be a game changer for the industry, Radhika? Or is it also a way to, I would say, manage all of the derivative volumes in a more structured fashion? If I look at it that way, and in the rubric of the broader attempt of regulators to ensure that people don't get hurt, small investors don't get hurt in the derivative segment, does this also fit into that larger picture?
If that is the intent, then I think it is a wise intent. I think the regulator has very rightly said for a long time and been concerned about retail investors' participation in derivatives. And, in this way, if funds and professional managers can offer you products that use derivatives to generate returns, and they are professional managers, and those are accessible to you at 10 lakhs. And keep in mind, it's 10 lakhs across all the strategies I offer as a new asset class, right? It's not even 10 lakhs per product. So it's actually quite accessible to the consumer. So if that is the intent and it's part of that larger plan, I certainly think it's a very, very good idea. Keep in mind, SEBI has also put in or proposed very high thresholds, and I think reasonably fair thresholds for who can launch this. If you're a new player, you need a certain amount of fund management experience, AUM that you've managed. So at least they're saying this is for seasoned players. And if it's part of that plan, it's a very good one. Is it a game changer for the industry? I think it's too early to tell, but it certainly opens the industry to more products, and that can only be good.
All right. Thank you so much, Radhika, for joining us today. Always a pleasure to speak with you here on NDTV Profit. So Radhika Gupta there saying that it's definitely going to open up more avenues. Is it a game changer? Too early to tell. In our earnings watch, L&T